Howdy there, folks. Welcome into today's video. 4 of my stocks announced some pretty huge news here just in the past, let's call it 24 to 48 hours here. And I want to go through all 4 in one video rather than making, separate videos for each of these, okay? All right, first one up here. By the way, I appreciate everybody joining me as always. Thanks so much for being subscribed, folks. A lot to go through in this one here today, okay? First one up here, Shopify. So Shopify is making a massive move up today. If you own Shopify stock, it's a pretty good day for you. I own this one in my Patreon portfolio. It's always a stock I'm like, I need to own more of this. I need to own more of this. It's up 9+% here today, up over 20% just in the past 5 trading days. Pretty shocking announcement here out of Amazon, okay? In a surprise tie-up, Shopify merchants will be able to offer Amazon's Buy with Prime option. Oh, wow. Are you kidding me? Amazon, these two companies have seemed like more of enemies in the past, and so the fact that they would have a relationship like this is kind of mind-blowing. Amazon and Shopify this morning announced a significant integration that will now allow Shopify merchants to offer Buy with Prime on their Shopify stores. The Buy with Prime feature allows online consumers the option to purchase their items using the store payment method in their Amazon wallet when processing payments through Shopify's checkout. Meanwhile, they also receive fast, free delivery and the option for returns through Amazon's fulfillment network. Definitely from Shopify's perspective, I can see why they'd be interested in making a deal like this, but at the same time, we'll get more into this, okay? The tie-up is notable given Shopify has been positioned in the past as a challenger to Amazon's business. The e-commerce platform, because if you think about, who's the only company that could potentially disrupt Amazon, right? Because I think Amazon's always been the disruptor, but Amazon's been around a while, right? And so now it's like, who could even be a potential disruptor? The only company really in the world that could be seen as even a potential disruptor has been Shopify, right? So this is intriguing. The e-commerce platform focuses on providing tools for merchants, allowing them to host storefronts, manage inventory, process payments, and more. The move also comes as a bit of a surprise, given that it was only a year ago that Shopify was warning merchants not to use Amazon's Buy with Prime, as it was in violation of Shopify's terms of service. The company wanted its merchants to use its own payment and checkout service, Shop Pay, instead. As a result, merchants who wanted to use Buy with Prime previously had to do so outside of their Shopify admin tools. Today, Shopify has changed its tune, right? And clearly Shopify ran through the numbers, ran through projections, and said, at the end of the day, this makes more financial sense for us to do it this way. They're not going to do Amazon any favors. I can tell you that much, okay? They're doing this because this is in Shopify's best interest. That's the bottom line when it comes to this, right? They said, we're on a mission to make commerce better for everyone. That means making sure our merchants are able to sell everywhere. To do this, we're committed to giving our merchants and their customers more choice, Shopify said in the announcement. Soon, it says Amazon will release an app that allows U.S. Shopify merchants who use Amazon's fulfillment network the option to add Buy with Prime into their Shopify checkout processed by Shopify payments. The app makes it easy for merchants to get started with Buy with Prime and will use their existing Shopify settings, customizations, and supported third-party app integrations. Merchants will also be able to see their automatically synced orders, promotions, catalog listing, taxes within their Shopify admin. It seems like this, whatever is going on here, has been in the works for a while, okay? Like the fact that not only did this press release come out, but all the details on features and what you'll be able to do and not do, that shows me that this has been in the works for a while. Minimum probably 6 months, but this could maybe go all the way back to last year in kind of the ugliness of, Shopify saying it's not in our terms of service and these sorts of things. And maybe at that time the companies came together and they say, hey, this could be mutually beneficial to both companies if we actually find a real relationship to work here, right? For customers, the app allows them to benefit from the fast, free delivery as they'd expect from Amazon.com, which, by the way, I don't know how much you guys order on Amazon, okay? But I can tell you, now it's getting to the point where many of the things I order on Amazon, many of them, and especially if it's anything that's like a more popular item, they're getting delivered to my house within 24 hours now. Within 24 hours, sometimes same day. That's a game changer, right? This is the moment we've talked about with Amazon for years is, oh my gosh, do you imagine how much of a threat Amazon's going to be if you could order something and it's to your house within hours, right? That's magical. Or imagine you're on a work site, right? You're some sort of construction work, handyman, whatever, right? And instead of having to run to Home Depot or Lowe's, imagine being able to order something from the app and having it delivered straight to your job site within, let's say an hour, 2 hours, 3 hours. That would be a game changer. That's the route Amazon's going. They're not quite all the way there, but they're clearly making the steps in the right direction. I still remember when all of a sudden you start getting stuff within 48 hours. That was magical, right? Meanwhile, merchants will be able to keep 100% control of their brand and customer data. Shopify president Harley Finkelstein explained. So the bottom, and that's always been the thing is, people don't want Amazon to have all their data and control their brand. They want to be able to control their own as a business owner, right? So the bottom line is this. The new app will make it easier for our merchants who also partner with Amazon to offer Buy with Prime to their customers on their Shopify-powered site, he added. After installing the app, merchants will select items from their Amazon inventory to be part of their Buy with Prime catalog on Shopify. Once added, the Buy with Prime button will automatically appear on the product's details page, matching the existing theme of the merchant's Shopify store. At checkout, Amazon Pay will be offered as a payment method alongside Shopify payments. Okay, this is very, very intriguing, okay? But what does Amazon have to say about all this? That's the Shopify side, okay? Here's what Amazon says. The app will be available for both new and existing Buy with Prime merchants, Amazon said. Quote, we're thrilled with the feedback merchants have shared about Buy with Prime, including the increased shopper conversion and new shopper acquisition, said Peter Larson, Amazon Vice President of Buy with Prime in a statement. Quote, the build of this app was a collaboration with Shopify, and we're excited to help merchants not only grow their businesses, but also save time and resources, all while giving Prime members even more places to enjoy their shopping benefits, he said. Okay, so clearly both companies have been working on this. This has been in the pipe for a bit here, right? And so the Shopify side, then we'll get to the Amazon side, and then we'll even get how this ties in with Tesla in just a minute, okay? But in regards to the Shopify side, to finish my thoughts around Shopify, it's a surprising move, but clearly Shopify is a very intelligent company, and they're a very database company. I think they're one of the smartest companies in the world, truly. If you look at this company, no one ever heard of them, and what Toby's built over there is absolutely incredible. And it seems like Shopify is just on a mission to become a big Goliath in the space. Shopify's growth is far exceeding what Amazon is now, but keep in mind, Shopify is a much smaller grower. And remember what Shopify is trying to do. Shopify wants to be asset light, and it looks like they want to be really, software related. They want to make magic on the back end and the front end for their clients, right? And whatever it takes to do that, that's where they're focused. And so it's just a different perspective from Shopify versus Amazon, which is certainly not asset light. Amazon's very asset heavy, right? It's a difference in business model. Now, next up here. So Shopify is a very small position for me. Amazon's a very large position for me. So what does this tell me about Amazon? Okay, this tells me about Amazon that what they have built over the years with their delivery network, their planes, their trucks, the tech on the tech side and on the let's call it big dog side, the actual buildings and infrastructure and everything like that. What it shows me is you can't compete with these guys. You can't compete with them. It's either you join them or you're going to do less business. That's what it seems like. Remember, Shopify is not doing Amazon any favors. They're doing this because it's in their best interest to offer this, right? It shows that Amazon just built something that you can't compete with. And remember, Shopify some years ago, had acquired a few companies and wanted, in my opinion, to compete more with Amazon on kind of the fulfillment side. And, they obviously parted ways with those businesses and sold them off. And clearly Shopify has acknowledged that Amazon's won that side. The delivery, the fulfillment, all that stuff, Amazon's won, and we need to, if anything, partner with them. So as an Amazon shareholder, this isn't like something earth-shakingly new to me, but it just shows even more so how important Amazon really is to the entire ecosystem now at this point in time. Now, where does this tie in with Tesla? Well, this reminds me so much of Tesla's recent partnerships, where if you notice, companies are just having to partner with Tesla, right? it's not like they want to partner with Tesla. It's just Tesla spends so much money on the infrastructure, on the supercharging network, and you're going to see a lot of partnerships, I'm sure, down the road when it comes to their self-driving technology and all that stuff, right? I mean, yeah, don't be surprised if you see partnerships down the road in terms of on the battery side with some of the other, equipment manufacturers in terms of automakers, right? And it just seems like Tesla spent so much up front, and now people just are realizing they have to partner with them. And it's very similar to Amazon. And that's why I said Tesla and Amazon remind me so much of each other, because they're both two companies that have focused more on building out infrastructure, build the costly stuff that no one wants to deal with. They've done that up front, and then everybody realizes, my gosh, we got to partner with these guys rather than try to compete with them, because they have certain advantages that we just can't touch. That's really powerful. And so, when it comes to like companies like FedEx, UPS, I mean, these companies are always seen as like, competitors to each other. The biggest competitive threat, in my opinion, for FedEx and UPS is Amazon, actually. I don't think everybody looks at it that way, but I think over the next 5-10 years, I think more and more people will realize the biggest competitor to UPS is not FedEx, it's Amazon. The biggest competitor to FedEx is not UPS, it's Amazon. And it just seems like Amazon's dipping their toe more and more into logistics, delivery, and all this stuff. So, yeah, surprising deal, but at the end of the day, it makes sense. Both sides aren't going to do that deal unless it makes sense for both sides. That's the bottom line with that, okay? Alrighty, next stock up here to talk about is the Planet, okay? And then we'll get into Palantir. So Planet is up 62% in the past 5 days. I mean, the stock went nothing but down for like 2 years pretty much. And now all of a sudden it's starting to go up again, right? And not just in a slow manner. 62% in 5 days is monumental. So what's going on here with the Planet, and what's my opinion of this? Well, they made a huge announcement, okay? So Planet's buying this Florida company named Vitican for $48 million. Planet has announced they're buying a Florida-based Vitican LLC in a deal valued at about $49 million. The deal also gives Vitican member a seat on the board, and Vitican shareholders will end up with about 26% ownership in the Planet. Now, first thing I thought about is I'm like, okay, that's a big deal. I hope Planet's not parting with cash to get this deal done. And we'll get into that in just a moment, because Planet has like last time I checked, it was like 40 something million in cash. They had a really strong balance sheet for the size of the company. And I'm like, we better not be parting with all that cash. We'll get into that in just a moment. According to the statement, Vitican, which I hope I'm pronouncing it right, I might not be, but anyways, Vitican currently operates 26 locations and is the 9th largest network in Florida. The company said that Planet 13's 3 locations in Nevada and Florida, in their upcoming location in Illinois, 4 leased locations in Florida, and the proven superstore and experiential retail experience. The proposed acquisition has the potential to enhance both absolute and per-store revenue generation. Quote, acquiring Vitican would significantly accelerate our time to market and, more importantly, scale in Florida, which it seems like Planet's really focused on Florida. Like, just seeing kind of what they've been working on in Florida, it seems like they're clearly the most bullish on Florida than any other market in the United States. Clear as day, okay? Vitican is one of the top 10 largest operations in Florida by retail network size, and we believe it has developed a reputation for high product quality and customer service, says Larry Scheffler, co-CEO of the Planet. We are excited to bring Planet's retail and product brands to Florida consumers after the closing of the proposed transaction, especially with the possibility of upcoming adult use legalization, he says, okay? Now, what are the kind of the details on the financial front here? And then I'll get into my opinion, okay? Well, the deal consists of, thank goodness, only $4 million in cash, $5 million in promissory note, 78 million shares in Planet common shares, so obviously a big dilution. And there's 2 ways to look at this. One is, it's not great to dilute shareholder value when the stock's 50 cents a share, right? On the flip side, all MJ stocks have been destroyed, and so I could tell you if this was 2 years ago, Planet would not have been able to pull off this deal for $49 million. I could tell you that. If this was 2 years ago, this would have been $120 million, $150 million, $175 million deal. Wouldn't have been $49 million. Vitican will continue to have $3 million in bank indebtedness, and $1.5 million or less in related party notes from the Florida VitaCan owners at the time of closing. Quote, we believe their ability to run lean, efficient operations in a cultural and strategic fit with Planet 13's company-wide philosophy and operations in other states, said Bob Grossbeck, the other co-CEO of the Planet. We laid out a set of goals at the beginning of the year, including using cost-effective M&A to accelerate time to market in Florida. We believe we are executing on our goals and setting Planet up for a stronger company in 2024. In addition to the stores, VitaCan also owns a fully operational greenhouse cultivation facility with a processing and analytical lab, which at full capacity has the potential to support more than double the amount of the combined Planet and VitaCan basically locations network in Florida. So that's pretty exciting, right? Now, what's kind of my opinion in regards to this, right? Well, first off, I have only 2 stocks I own in this space, right? And this space has been devastated. Like everybody left this, Jack Jackson space, let's just call it that. All these stocks have been kind of in a bottoming out, kind of forming phase here recently. A company like Planet has a very different, I think, objective than a company like Avant. Avant seems like they're very focused on, obviously their growth is insane when it comes to Avant, but it seems like they're much more focused on export markets and having some really successful high-end brands and getting to profitability. It seems like Planet wants to set themselves up so they are like the most well-positioned company in the world when federal legalization comes. That's just my interpretation of kind of watching what Planet's up to here. I think that's what they're trying to do. I'll just be honest. That's what I think they're trying to do. We'll see if they're able to pull it off, but someday we're going to have federal legalization, in my opinion. And when that day comes, it looks like Planet could be the most well-positioned company, honestly, in the entire space to capitalize on that, because a lot of the other players have gone under or they got way too indebted and they just, they got too excited too fast. Let's just call it that, where Planet's been kind of patient. And now they're pulling off this deal for this operator that I can tell you they're getting, there's no way they could have pulled off this deal 2 years ago if for the price they just paid. I mean, it would have been ridiculous how much they would have needed to pay because all these companies' valuation. Planet sat around, they said, we'll wait, we'll see what happens here. Valuations came down massively and they pounced, right? So I'm open to the idea. And we'll see how it works out. We'll see how the integration is. I'm not too excited. I'm also not too down. Bob and Larry have done a great job with the company over time. And, this was a company that could have went bankrupt and should have went bankrupt during Rona, when all of a sudden they had one location at that time, and that one location was shut down. Like, that was insane. And to see them get through this and now pulling off deals like this, these guys have come a long way in the past, I can tell you, 3 or 4 years. A long dang way. And so we'll see how it all plays out. I remain optimistic, but we'll see. Okay. Alrighty, and obviously the stock is just mooning right now. It's been, pretty big moves, but we got a long way to go in that one. I'm a long-term holder. I've held the stock for several years. I plan on holding it for a long time to go in the future and seeing what plays out there. Okay. Next one up here. Palantir Technologies. Massive move down here today, down over $7,000 on Palantir shares. Obviously, the stock's doing well for us overall. We're up $34,000 on the stock, even after today's massive move down, up about 70%. So what happened with Palantir today? Okay, so what happened with Palantir? The stock fell, now it's like 7-8%, but it was down 9% after Morgan Stanley downgraded the shares to underweight and raised the price target on the stock to $9 from $8. Thanks for the raise of the price target from 8 to 9. We do appreciate that, Morgan Stanley. So nice of you. So dang nice of you. Oh, you got to be flipping my flapjacks. Come on, man. Okay, so what's Morgan Stanley saying here? Well, the analyst said, near-term optimism in AI, product cycle, and valuation premium creates an unfavorable risk-reward in the stock, as visibility on artificial intelligence platform AIP monetization still remains low. The government segment seems unlikely to provide an offset and estimates already imply a second-half reacceleration. The analyst noted that their view is based on expected delays in AIP revenue contribution, given management commentary, which Palantir has yet to figure out how to monetize it. I freaking told you guys. I told you guys that line was going to come back and Wall Street was going to make a huge deal about it. As the moment I heard that out of Karp's mouth, I knew there's going to be a bunch of individuals on Wall Street that are absolutely going to flip out and they're going to freak out. oh my gosh, Palantir doesn't know how to monetize AIP yet. What? They're talking about they're going to figure out a way, but they don't know yet. I knew that line was going to come back to bite. I freaking knew it. And sure enough, it did. Man, when you've been doing this 15 years, like, you know how all these Wall Streeters think. You know what's going to trigger them to want to buy a stock, sell a stock, things like that. And when I heard that, I was like, not a good look, man. Risk that the government business may not be able to offset a top-line deceleration after recently beginning to deteriorate. In addition, the analyst's view is also predicated on a difficult setup in the second half of the year's revenue outlook already implies an acceleration in estimated organic revenue growth, ex strategic investments in the Japan JV contribution, joint venture there, which sets a higher bar for the positive estimate revision needed to justify valuation. Palantir has a strong buy rating at Seeking Alpha's quant rating system, but meanwhile, authors have it as a hold, right, on average. So that's interesting. Even that just shows how much of a divisive stock Palantir is, because the quant rating system has Palantir as a strong buy. Meanwhile, humans have it as a hold on average as Seeking Alpha. Like, it's just intriguing, right? Now, I want to go through a couple comments in regards to Palantir here that I saw in this article, or it wasn't even an article, it was a press release that I thought was very interesting from some folks, okay? But before we get into that, just kind of my finalized thoughts on this Morgan Stanley note. I understand it. I'm of the expectation that we were going to get some of these analyst type downgrades and just kind of negative looks from people that are already, remember, Morgan Stanley's already not very bullish on Palantir. If you got an $8 price target on it, that's what their price target was. Yeah, you're clearly not very bullish. You up it to $9, you're clearly not very bullish, right? So it doesn't surprise me. It doesn't surprise me. And yeah, I'll leave it there. In terms of software revenues, it's so important that almost pretty much no one's going to be making big money from the software side until 2024. It's not happening this year. This is a hardware year. This is the hardware year. Next year starts the software year. Snowflake CEO said that. It's basically what we're getting from almost every company out there. You got to build the infrastructure first. You got to build the hardware side. Why do you think NVIDIA is selling chips like for any freaking price right now? Is because NVIDIA is so in demand right now because everybody's got to build out that hardware side first. Then we can talk about the software side in 2024, right? So that's kind of my perspective there, right? And a lot of people believe that Karp and the team are really using AIP as not necessarily a direct revenue generator for that, although it could be. They're looking at that as kind of a more of a Trojan horse to be able to sell Foundry, Gotham, Apollo, different products like that to customers, depending upon whether they're government customers or commercial customers, okay? Now, a couple interesting comments I saw. One was from this gentleman, this Thomas44, okay? This was his comment. He says, 1, Palantir's business continues to grow at an aggregate rate in its TAM, total addressable market, is about to expand exponentially in the coming years. That's definitely a belief I have as well. We'll see if it comes true. 2, insider selling has decreased significantly versus 2021 and 2022. 3, the business reported GAAP profitability. By the way, I would like to see less selling from insiders than they have right now. I'd like to see it even tame down a bit. That would even give even more confidence around the stock and where the company's going over the next 3 to 5 years. 3, the business reported GAAP generally accepted accounting principles profitability and stock-based compensations continue to decrease with each passing quarter as its SBC stock-based compensation decreased to $114 million against $145 million a year ago. 4, both its top line and bottom line have improved both quarter over quarter and year over year. 5, GAAP profitability now and the company is projecting increase in its adjusted income from operations, gross revenues, and free cash flow going forward. 6, company just announced obviously the recent $1 billion share buyback. On top of all this, Palantir could be included in the SP 500 in the coming quarter, and it would become eligible for the inclusion after the release of the Q3 earnings report later this year, when the company is expected to report a 4th consecutive profitable quarter, obviously, right? So, that's that gentleman's comment there. I think it's a pretty good kind of, fight back against the Morgan Stanley one, right? This comment cracked me up and said, which one of their clients wanted to buy Palantir for less? You could say it that way. You could also say, who's got a little short position out there as well, right? You can always look at these things, and these are things you never know. You never know what you can prove and what you can't prove, but I thought that was pretty comical, right? And then these two were interesting too. I have to believe that Morgan Stanley keeps on publishing their downgrades as a vendetta against the direct listing the company did. They come out with these downgrades multiple times a year. They might be right, but it seems odd. Who knows? I have no clue. Interesting how Morgan Stanley added 56% to their position last quarter. This couldn't possibly be adding more to this downgrade, could they? So, yeah, and I don't keep track of, what these folks are adding for their positions or subtracting, so I don't know. I'm assuming that's accurate, given the fact that it has 14 likes, but, you never know what the objectives are with this. It could just be that's how they really feel. It could be other things, ulterior motives. We never know, right? And that's the beauty of Wall Street. You never really know what the true motive there is or is not, right? But, my opinion is, I continue to be a Palantir long. I'm bullish on the long term. I think the short term is going to continue to be volatile with the stock, as I spoke about on my reaction channel last night. I think we could be kind of that 14, 15, all the way up to $20 range here for a bit, and just kind of shaking around. And 1 minute it looks great, and the stock's roaring, and the next minute it's down 9% in a day. I think that's just going to be what continues on. So appreciate everybody joining me as always. Thanks so much for being here. Thanks for being subscribed, folks. If you're looking to apply to join my private group, or you'd like to join my Patreon and support my content, those are in the description area down there. Also, if you want to say hello to me on Instagram because you enjoy the content, you ever just want to say hi to me, say hello to me on Instagram. Much love and have a great day.